Hello and good afternoon, Holly here, live from 𝐊𝐶 studio in Sydney, and you're watching the Mid-Market Pulse. Let's zoom our lens on over to the Australian share market performance. Australian shares edged to their choppy trades, with gains in utilities and material stocks offset by losses in tech and healthcare. The market swung between gains and losses as investors tried to make sense of the outlook for inflation in the US. Only adding to that was the persistent concern over COVID-19 situations in the country, and unemployment data also kept investors on edge. The S&P ASX 200 was down by 6.30 points this afternoon, while the index opened lower today following muted cues from US stocks that settled mixed overnight. In a fresh COVID update, New South Wales has reported a sharp decline in new cases within the past 24 hours. The state registered 65 new locally acquired cases, which was the lowest in the last 4 days. New South Wales Premier Gladys Berejiklian lauded the fall in cases but expressed concern that 28 of those were out in the community while infectious. Meanwhile, data released by the official Bureau of Statistics showed that unemployment rates had fallen to 4.9% in June from 5.1% in May. According to the government data, nearly 30,000 jobs were created last month, and with this, the unemployment rate has declined for 8 months in a row. Moving on to the sectoral front, 6 of 11 indices were trading in red by lunchtime. Utilities and energy were the best performing sectors on the ASX, with nearly 1.5% in gains, followed by materials, which rose 0.6%. Among others, A-REIT, consumer staples and consumer discretionary were trading higher, with modest gains as well. On the flip side, the IT sector emerged as the top loser for the second day, falling over 1% in line with the US counterpart Nasdaq. And on this note, let's see how the sectoral indices are performing. In the tech sector, BNPL stocks witnessed selling pressure for the second straight session amid concerns over rising competition. US-based fintech major PayPal has launched a fee-free installment payment product in Australia to take on the country's homegrown BNPL players. On top of that, tech giant Apple has also decided to foray into this highly popular form of payment system. Apple is launching a rival BNPL service, Apple Pay Later, which will be offered in partnership with Goldman Sachs Group. It goes without saying that the sectoral leaders Afterpay, Zip and Sezzle have got to keep a closer eye on the fierce competition. And as expected, they were all trading lower, falling between 2 and 3%. Among others, Split Payments and OpenPay Group were also trading in the red. Australian energy majors Beach Energy, Santos, Origin Energy and Oil Search traded in the red as well amid an oil price downtick. Crude oil prices fell over 2% in the overnight trades after US data revealed that demand weakened a bit in the most recent week. The fall in prices was also triggered by a compromise on supply reached by the major global oil producers. In the mining space, index heavyweights BHP Group, Rio Tinto and Fortescue Metals all traded lower. The concerns about demand for the steelmaking raw material in China pressured the Dalian iron ore futures that ticked higher in a range-bound trade. Meanwhile, ASX-listed copper players Oz Minerals and Sandfire Resources traded in the red as well. Weak demand from China and uncertainty over surging inflation had put pressure on copper prices on Wednesday. Among the gold mining stocks, Newcrest Mining, Evolution Mining, Ramelius and Gold Road all traded higher after Powell's comments. Well, now it is time for a short break, but stay tuned with 𝐊𝐿𝐴 TV.
Hi, this is Andy Liu broadcasting from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Media Studio in Australia, and I'll be hosting the new 𝐊𝐚𝐥𝐤𝐢𝐽 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐴𝐚 TV and join me.
Welcome back from the break. This is Holly, live from 𝐊𝐴𝐚 Studio, and you're watching the Mid-Market Pulse. Let's turn our attention now to the biggest gainers and losers that captured investor attention by the mid-market session. Healthcare firm PolyNovo was the top percentage loser on the ASX, falling nearly a staggering 6%. Some of the other notable losers include financial services firm Credit Corp Group, BNPL player 𝐧𝐞, corporate bookmaker PointsBet Holdings, and travel firm Corporate Travel Management. On the other hand, car parts manufacturer ARB Corp was the top performer on the ASX with nearly 9% in gains. Some of the other notable gainers were utility firm Spark Infrastructure Group, mining firm St. Barbara, and global online marketplace Redbubble. Moving on, let's have a look at the ASX stocks which are creating a buzz today. Shares of Sydney Airport fell as much as 1.9% after the company rejected a $22.26 billion takeover proposal. The operator of Australia's largest airport said the $8.25 per share offer by the group of infrastructure funds undervalued the company. Brokerage firm Jefferies says the rejection was expected, but there is potential for a revised bid closer to $9. Bloomberg News last week reported a consortium led by Macquarie Group was considering a rival offer, citing sources. Shares of Woodside Petroleum fell over 1% to $22.96 despite strong earnings. The company reported a 67% rise in sales revenue for the second quarter, helped by higher realized prices for natural gas and oil as global demand recovers. And I guess all that glitters is not gold, as Dacian gold fell as much as 6.5% to 29 cents on weak production. The Gold Explorer said its production for financial year 21 stood at just over 100,000 ounces, lower than previously estimated figures. Rainfall events experienced on the site affected conditions in both the Heffernan and Mount Marvin open pits, resulting in contributing to the lower than planned production for the quarter. And next in the news today, shares of food and beverage company Forbidden Foods were trading flat. The company had signed an exclusive distribution agreement for Funch and Sensory Mill in the Philippines with Moshi Wellness. This will allow Forbidden Foods to sell, market, and distribute its infant and toddler health and nutrition brand Funch and its plant-based food brand Sensory Mill. And to talk about big brain thinking, Total Brain on Thursday said it has entered into a 3-year contract to provide its mental health software to Eastman, a US-based global specialty materials company. Based in Kingsport, Tennessee, Eastman services customers in a more than 100 countries and is a part of the Fortune 500. Total Brain is a firm that has developed and offers Total Brain, the world's first mental health self-monitoring and self-care platform powered by the largest standardized brain database. And Tasman Resources has informed its shareholders that there is a significant growth of OptiBlend in the Indian market. OptiBlend is a dual fuel system that enables diesel generators to use natural gas as their primary fuel without modifying the engine or the diesel fuel system. Well, it is time for another short break, but stay tuned and I'll be right back. Tune in to stay updated while on the move.
we will tell you where the crypto craze has reached,
where the property market is headed next,
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter,
Be on top of the latest news and announcements
with 𝐊𝐶𝐞 TV.
As the world navigates through the COVID-19 crisis, innovation and digital transformation are helping us ride through the pandemic woes, learn how to think differently, ignite, manage and sustain in an uncertain world from the leaders in innovation. Mark your calendars for an insightful discussion with CEO and founder of Space Talk, Mr. Mark Fortunato, and co-founder and CEO of Early Birds, Mr. Chris Poria, in 𝐊𝐶𝐞 Media's exclusive Invest Nest webinar on July 23rd, 2021 at 12:30 Australian Eastern Standard Time. Our client, Space Talk, is a technology company that is all about keeping families confidently connected through Australian-designed wearable devices. It offers stylish, standalone mobile phones built into a smartwatch for kids as well as adults. While Early Birds, also our client, is a B2B platform that is helping organisations to transform with actionable innovation by connecting innovators and early adopters based on industry, business function and expected outcomes. So, it is time to get some valuable insights from these stalwarts, making a unique position in terms of innovation. Block your seats now and enter the future of revolution with 𝐊𝐶𝐞 Media.
Welcome back, I'm Holly, live from 𝐊𝐶𝐞 Studio, and you're watching the Mid-Market Pulse. Let's have a look now at some more trending shares. The share price of software firm Schroll Group rose nearly 8% to 1.4 cents. The company released its product Schroll Connect 3.0. Schroll is a global SaaS provider to education professionals and institutions. Schroll Connect is an online SaaS platform enabling international schools to streamline teacher recruitment and candidate management activities. It also provides interview scheduling, calendar integration, and DocuSign integration, as well as customizable email management as enhancements. And moving on to the last ASX listed company in our list today. Shares of biotech firm Actinogen Medical climbed nearly 9% to 12.5 cents. That was on the back of enrolling a patient for its 𝐵𝐷𝐼𝐴 trial. The company said it had enrolled the first patient in Part A of its two-part 𝐵𝐷𝐼𝐴 trial, which targets patients with mild cognitive impairment due to Alzheimer's disease. This follows Actinogen receiving ethics approval from the Bellberry Human Research Ethics Committee to start the 𝐵𝐷𝐼𝐴 Part A study. According to the announcement, Part A is being conducted at 4 outpatient sites in Australia and will enroll 105 older healthy volunteers aged 50 to 80 years old in a dose-ranging study to confirm the minimum effective dose. And moving on to the final leg of our show, let's focus on the global equity market performance. In the overnight trade, Wall Street ended on a mixed note as concerns about rising inflation kept investors cautious. The market sentiment was lifted after US Fed Reserve Chairman Jerome Powell said that inflation will fade soon. The central bank plans to continue its current monetary policies, and in a choppy trade, the Dow Jones ended 0.13% higher, while the S&P 500 added 0.12%. The tech-heavy Nasdaq Composite slipped 0.22% as well. And now to turn our heads east towards the Asian markets, most of the regional stocks were trading lower, tracking mixed cues from Wall Street. Japan's Nikkei was the worst performer in the region, falling over 0.8%, while China's Shanghai Composite was also down 0.06%, as investors reacted to GDP data. The Chinese economy grew 7.9% in the second quarter, less than half the 18.3% reported in the March quarter, according to the National Bureau of Statistics. And bucking the trend, Seoul's Kospi was up 0.2%, while Taiwan's weighted index rose 0.55%, and Singapore's Straits Times was also up by 0.05%. So not all bad there. And with that, it's just about time to wrap up, but keep watching Kalkine TV as we bring you the latest and trending market updates live from Sydney. Holly Shields signing off.